Assalamualaikum and hi everyone. We are accounting student from INTERIM Dugon and we will be presenting segmental and interim reporting of advanced synergy BERHAD.
Assalamualaikum and hi. The company that we choose for this assignment is Advanced Synergy BERHAD. Advanced Synergy BERHAD is incorporated in Malaysia on June 5, 1920 under the name of Batu Lintang Rubber Company Limited. It is originally involved in the cultivation, processing and marketing of rubber and oil palm products. The ABC Group comprises operating activities and subsidiaries and associates that service business and consumer markets in a variety of industries. These operating companies are grouped under the several keys of business divisions of the ASB groups, which includes hotels and resort, information and communication technology, property development, travels and tours, card and payment services, bus body fabrication, and the last one is education. Now, I would like to explain about the management approach, which is on the type of segment and the CODM and its responsibilities. The type of segment. In Advanced Synergy BERHAD, there is two segments, which is the business segment and the geographical segment. For business segment, the group categorize their own income by the nature of the business. They make revenue by selling their products or providing the services to the others. In this group, there are 6 segments. The 6 business segments, which are investment holding, property development and technology investment, hotels and resorts, information and communication technology, travel and tours, and the last one, financial services. In determining the geographical segment, the revenue is based on the geographical location of the customers. The composition of each geographical segment, first, in Malaysia, which is provide investment holding and full corporate and financial support. At Singapore, they make design and developing the telecommunication software app and systems. And the last one, at Europe, Africa and Middle East, they operating and managing hotels and resorts and others.
There are 3 factors to be considered in having a segment report. Firstly, nature of business activities. It is defined by any activity carried out by an entity with the main objective of profit maximization. Next, existence of managers responsible for the activities. Each segment that in charge by the segment manager are responsible for assuring the performance of the segment and making directly contact with the chief operating maker, that known as CODM. Lastly, information provided to the board of the director. The chief operating decision, CODM, shall refer to the report measured by the board of the director that contains of reliable information for the entities such as financial statement in order to make better decision making. Nature of the business activities. This is 4 factors may take into consideration. Firstly, the nature of production. In Advanced Synergy BERHAD, there are several segmental reporting, which is investment holding, information and communication technologies, travels and tours, and others. Secondly, nature of production. This is based on Advanced Synergy BERHAD provided to their customers. As you can see, on segmental report of Advanced Synergy BERHAD provided to its customers facilities, financial service, hotels, and education. Next, type of customers. This is shown what of customers Advanced Synergy BERHAD try to get on. It is target market for them. Lastly, the method used to distribute product or provided services. This is shown how the product and services are being delivered to their customer.
Identify the CODM and its responsibility. So what is CODM? CODM is a term for Chief Operating Decision Maker. it identifies a function and not necessarily a manager with a specific title. That function is responsible to allocate resources to and assess the performance of the operating segment of an entity. It could be the chief executive officer or anyone. However, it also could be a group of executive directors and others. In Advanced Synergy BERHAD, the group managing of the director who is responsible for the allocation of resources and assessing the performance of the operating segments has been identified as the chief operating decision maker, which is the CODM that makes strategic decisions.
Not all operating segments need to be separately reported. An entity shall report separately information about an operating segment that meets any of the following quantitative thresholds. First, its reported revenue, including both sales of external customers and inter-segment sale or transfer, is 10% for combined revenue, internal and external, of all operating segments. Next, the absolute amount of reported profit or loss is 10% or more of the greater in absolute amount of first, the combined report profit of all operating segments that did not report a loss, and second, the combined reported loss of all operating segments that reported a loss. Third, if assets are 10% or more of the combined assets of all operating segments.
Here are reportable segments and non-reportable segment. How can we recognize reportable segment? To start, calculate the total revenue for each segment and then use the 10% threshold test on every segment. For example, investment holding. The total revenue for investment holding is 60,559,000 divided by 134,241,000 times with 100%, which will get 12.34%, and can be recognized as reportable segment because it is greater than 10%. Regarding non-reportable segment, we can observe here in property development and investment, whereby the total revenue is 6,760,000 divided by 134,241,000 times with 100%, and will get 5.04%, which less than 10%, and will be recognized as non-reportable segment. There are 4 reportable segments, which are investment holding, hospitality, information and communication technology, travel and tour with 12.34%, 11.03%, 54.85%, and 11.52% of 10% threshold test respectively. Meanwhile, non-reportable segments are property development and investment, financial services and others because they are less than 10%.
Next is 75 rule. After calculating 10% threshold test, the entity should ensure that the total external revenue attributable to those reportable segments is at least 75% of the entity's total revenue. Otherwise, additional reportable segment should be identified. We need to add reportable external revenue divided by total revenue times with 100%. Hence, the total of reportable external revenue, which is 104,102,000 divided with total external revenue 160,285,000 and times with 100% is equal to 89.59%. Since it exists to 75%, therefore no need to add additional reportable segments. As shown, new segmental report of Advanced Synergy BERHAD is consists of 4 reportable segments, which is investment holding, hospitality, information and communication, travels and tours. This is because it meets 10% threshold. Other than that, this new segmental report also consists of 1 non-reportable segment, which is consists of property and development, financial service and others, and have to disclose under all other segments since it's not meet 10% threshold.
In conclusion, there are pros and cons in every decision, the same as segment reporting. For advantages of segment reporting, one of them is transparency and better insights. segment reporting can show which portions of a company operation are profitable and which are a drain on the bottom line for companies that operate in various market segments or geographical regions. A change in strategic direction may result if segment reporting reveals that a company's international operations are more profitable than its local operation. If done correctly, it prevents management from hiding unprofitable ventures. And the last one is improve context. Segment reporting also enables stakeholders to gain a clearer understanding of the fluctuation that may impact overall results. If a business reports much higher earnings than expected, for instance, segment reporting shows where those earnings are coming from, the same report can be examined by stakeholders to evaluate whether the figures are sustainable. It is intended to aid investors in understanding the business and its potential cash flow. Meanwhile, one of the disadvantages of segment reporting is presenting segment operations results to outside users could lead to the segment competitive position. Competitors would be given access to confidential information about profitable or unsuccessful products, plan for new products or entries into new market, apparent weaknesses that might lead competitors to step up their own effort to take advantage of the weaknesses. And the second disadvantage is investors and other external users who read segment information could be misled by it. Operating data by segments are developed for internal management users, and management frequently makes arbitrary decisions while creating such segment data. Therefore, internal management users are aware of the limitations and nature of segment data, but external users find it challenging to comprehend and apply it to investment decisions.
Next, we move to the basis preparation of interim report. The unaudited interim financial report has been prepared in compliance with MFRS 134, interim financial reporting, and paragraph 9.22 of the main market listing requirement of Bursa Malaysia Securities Berhad, means that it is a quarterly report. Firstly, a list issuer must announce to the exchange an interim financial report that is prepared on a quarterly basis as soon as the figure has been approved by the Board of Directors of the listed issuer, and in any event not later than 2 months after the end of each quarter of the financial year. Next, the listed issuer must include the quantity report, the information set out in Part A of Appendix 9B, and any other information that may be required by the exchange. Lastly, if a change in the financial year is proposed by the issuer, such as the issuer must consult the exchange as to be a period covered by the quarterly report. Next, we move to accounting policies used. The accounting policies and method of computation adopted by the group in this interim financial report are consistent with those adopted in the audited financial statement for the financial year ended 31 December 2019, except for the adoption of the following new Malaysian Financial Reporting Standard (MFRS), amendments to MFRS, and IC interpretation. Two accounting policies that has been used by Advanced Synergy Berhad (ASB) in preparing the interim report are MFRS 136, impairment of asset, and also MFRS 16, leases. For the MFRS 136, impairment of asset, the company measured loss allowance at an amount equal to lifetime expected credit losses, except for the following, which are measured as 12-month expected credit losses. The maximum period is considered when estimating expected credit losses in the maximum contractual period over which the company is exposed to credit rates. Next, for the MFRS 16 leases, on the date of initial application, the company applied the modified retro practice approach and did not restate the comparative amount for the period prior to the first adoption. The adoption of standard, the company capitalized its lease-oriented premise on the statement of financial position by recognizing them as a right-of-use asset and the corresponding lease liability for the present value of future lease payment. Next, type of interim report. 4 types of interim report that has been prepared by Advanced Synergy Berhad (ASB), which is condensed statement of financial position, condensed statement of comprehensive income, condensed statement of cash flow, and last one is condensed statement of changes in equity.
Next, I will talk about the period for the current and comparative of each statement prepared by the Advanced Synergy Berhad. The first statement is a statement of financial position. The current period starts from 30th June 2021. Meanwhile, the comparative starts on 31st December 2020. For a statement of comprehensive income for the current period start on 1st April 2021 until 30th June 2021, while the comparative start from 1st April 2020 until 30th June 2020. Besides, the cumulative period start on the 1st January 2021 and until 30th June 2021. Meanwhile, for the comparative, it starts from 1st January 2020 until 30th June 2020. For a statement of changes in equity, the current period starts on 1st January 2021 until 30th June 2021, and for the comparative, it started on 1st January 2020 until 30th June 2020. Lastly, for a statement of cash flow, the current period starts on 1st January 2021 until 30th June 2021, and for the comparative, it started on 1st January 2020 until 30th June 2020. Okay, next we will take a look at the adjustment. The first one is as 1 January 2021, Advanced Synergy BERHAD opening inventories are 45,225,000 and it varies annually. As of 30th June 2021, the cost is 45,639,000 and the net receivable value is 45,500,000. For the adjustment, we need to choose the lower price between the cost and the net receivable value. So if we look here, the lower price is the net receivable value because 45,500,000 is lower than 45,639,000. And for the difference between the cost and the net receivable value, which is 139,000, will be expensed in the statement of profit or loss. For the second adjustment, as of 15 May 2021, Advanced Synergy BERHAD is unable to collect the amount of 35,000 because the customer who owned the 35,000 was declared bankrupt. For the adjustment, as we can see, the amount of receivables, prepayments, and the contract asset are 74,603,000, and the amount of the bad debt is 35,000. The new carrying amount that we will get after we minus the amount of receivables, prepayments, and contract asset with the amount of bad debt is 74,568,000. The amount of bad debt, which is 35,000, will be expensed in the statement of profit or loss. Lastly, as shown here, these are the before and after adjustment of the financial statement. As we can see, the inventories as of 30th June 2021, we have got 45,639,000, and as of 31st December 2020, we have got 45,225,000. Meanwhile, for the trade receivable, prepayments, and contract asset, as for 30th June 2021, we have got 74,603,000, while as of 31st December 2020, we have got 77,451,000.